It would be too late. It's quite simple. You have to prepare for this, or tough. I'm sorry, but that is what it amounts to. The only thing to do is not to go and buy paper gold, not to go buy ETFs, but you have to have the physical.
As people who have been in the minority, maybe at less than 0.5% of most people actually waking up to these risks because we're not being told about these on the mainstream financial press. But for those who have been following this progression of this train wreck in slow motion, or not so slow anymore, and have been trying to position themselves to be less exposed to catastrophic loss and risk than they would be otherwise, and then most people will be. When the time comes of what you're talking about, with major markets locking up and major exchanges being closed and that sort of thing, if people are thinking, well, I'll wait until I'm sure, or I'll as long as the party's going, I'm going to keep my funds in the market, but once things look really grim, then I'll go get my whatever it is, hedge, protection, that sort of thing, physical assets, that sort of thing. It sounds like from what you're saying, you're thinking it may be too late at that point.
It would be too late. It's quite simple. You have to prepare for this, or tough. I'm sorry, but that is what it amounts to. The only thing to do is not to go and buy paper gold, not to go buy ETFs, but you have to have the physical. You have to have coins which are legal tender. I mean, I don't know what the legal situation is in America, but in this country, we have sovereigns. We also have, I think, virtually any coin produced by the Royal Mint, which has the sovereign's head on it, is legal tender and can be used as money for transactions. So that is important. Also, any silver coin produced by them is legal tender, so that can be used for transactions as well. So that is important. So if you haven't got that when the whole system falls over, then you're not going to get it. I mean, it's as simple as that. Or the only way you will get it subsequently is to make something or to sell something for gold or silver coin. And that's the only way you'll get it. What the authorities will do in this case, I mean, to an extent, it depends how quickly things deteriorate. I'm tempted to think that things will happen in phases, but probably with not a lot of time in between. I think the first thing that we see is a crisis in financial asset values and a banking crisis. The currencies, I don't think, fall over immediately, but you will find that gold and silver will be very, very scarce. And at anything like current prices, it just simply won't be available. If there is any time between the two, then I think what the authorities could well do is they could well try and stop us owning gold and silver, because they would see that as adding to the loss of purchasing power of currencies as people seek alternatives to using fiat currencies. I mean, it's happened before. It happened famously in 1933, and it happened in John Law's France in 1720 to 1721. I mean, basically, they sent the police round, or the troops, to take any gold, silver, jewelry, anything off people, to stop them using it as currency, and incidentally to bolster the the currency, or the assets, if you like, of John Law's bank, however it went, or even, I suppose, the king's assets. So governments will resort to anything under these circumstances, and we have to be very wary of that situation.
The words you're speaking are chilling, and it reminds me of back at the Declaration of Independence of the United States, where the colonists had felt that they were under just tyranny and usurpation of their natural rights by the leadership, in this case, King George III of England. But it led me back to my question that we started out from: is can the central banks save the day? Can they avert disaster? And my mind is drawn immediately to the question of, well, isn't this a disaster of their own creation, of their own making, by design or by policy, certainly? And are they not responsible to the people? Have they ever been responsible to the people, or only preservation of the system, as you said? And I think you mentioned something in our pre-conversation when we were talking about that they've already failed in some major respects. I just wanted to read one quote from the Declaration of Independence. It says, "A history of repeated injuries and usurpations, all having in direct object the establishment of an absolute tyranny over these states," in this case, the United States, the states and colonies of America, but in the people of the world, trying to live their lives, trying to do their good work and save up the fruits of their labors in tangible form that they can use in the future for whatever they freely choose privately. Have the banks upheld any of those natural rights of people, or have there been these repeated injuries and usurpations, all having direct object the establishment of an absolute tyranny over the people?
Well, central banks are basically appointed by governments, and they may claim that central banks are independent, but they appoint the executive of the central banks, and they're not independent in that sense. So the central banks are a tool of government. And what we see increasingly is that the interests of government are diverging from the interests of its electors. The art of politics is to persuade everybody that you are actually working in the electorate's interests, when in fact you're not. And that is really the situation. So the tyranny under George III, in fact, that it was not quite true. There's a bit of presentation in that, because George III did not take these decisions. The decisions were taken by the government of the day, the British government of the day. So it was them who actually should be accused by the colonists of taking away their rights, taxation without representation, all this sort of stuff. Rather than George III. He was the figurehead, if you like. What the central banks are doing is their primary objective, actually, is to ensure the government is always funded. And that is why they license commercial banks, so that through the process of credit creation and the creation of money, government will always be funded. And that's why when things started to sort of get adrift and government wanted to spend a bit too much money, effectively they've been driven progressively off the gold standard. So the idea that central banks are working in the interests of you and I, forget it. They're actually taking our wealth. I mean, we've talked about the Cantillon effect and so on and so forth before, whereby if you debase a currency, then you're just literally without any representation whatsoever, taxing the wealth of the nation, and particularly the productive side of the nation. You're just taking it all away for yourself. And that's basically what they're doing. So are they working on behalf of the people? Are they interested in the people? No, certainly not. They're primarily interested in funding the government. And I really think they have no further interest. And all this stuff about, we will target inflation at 2% and we will ensure that it is consistent with full employment. I mean, that's a load of rubbish. The reason behind that is that actually they want to have as much employment so that the government revenue is as high as it can possibly be made. So I don't buy the story that these guys are just literally fallen angels who can get up again and then suddenly realize the errors of their ways and be nice to us. And no, that's absolute rubbish. Not at all.
So where does that leave us in this current train wreck, I call it again? You talked to us earlier saying you'll be surprised if the euro makes it throughout the end of this year. It sounds like the JCB is of grave concern to you presently in the near term, as is the ECB. Are those the areas that you're looking most closely at to see signs of these imminent cracks that you're expecting to see appearing in the financial edifice?
Yes, generally, but I wouldn't like to exclude London from this, because London, being the international centre, also has the potential to destabilise things, and we haven't exactly been, if you like, blameless in this. I mean, the level of gearing in Barclays and Standard Chartered is still very, very high. I can't remember what the figures are off the top of my head, but I mean, we're looking at all sort of nearly Japanese levels. HSBC less so. I think they're probably a bit under 30 times. But I mean, this is still ridiculously high. HSBC has been criticised, and so has Standard & Chartered to a degree, about their links into China. And that has been seen as a risk. And I'm sure that those banks have taken steps to ensure that the liquidity on their balance sheets gives them at least some protection. But nonetheless, if you have to start writing things off, and this is to me, the big mistake in regulation, what the regulators have done is they've concentrated on how the balance sheet is structured, rather than looking at the relationship between total assets and equity, which is what any banker looks like when he gets frightened about economic conditions. I mean, all this sort of stuff about, Basel regulations and all the rest of it, it's all about, having liquidity in your funding side, or having it tied up on your funding side, and having loads of liquidity on the asset side. And that way, apparently, according to the Basel regulations, banks are systemically not risky. But it ignores the pressure on the management when they turn from greed to fear, when they stop expanding bank credit, when they see a bear market and they think, we've got to reduce our exposure to the markets. That is where the real risk comes from. And it seems to me that none of the regulators have actually taken this point on board.